You're still relying on your gut feeling when betting. That just means the bookmaker is already getting ready to cash in. It's time for strategies instead of luck. We provide well-founded facts about the truth and show you how to become one of the 1% who make legitimate profits. Whether it's with matched betting, sure bets, or value bets. sportsbettingacademy.com.
The new year has begun. And today, 3 value bets are waiting for you, which I will discuss with you in the finest detail. If you stick around until the end, my name is Daniel Winterholzinger. I am the founder of the Sports Betting Academy, the largest German-speaking educational platform related to sports betting. And I am what you might call a sports betting researcher, someone who studies techniques to improve at sports betting. And is it even possible to beat this industry? Today, I'll show you a very interesting line of thought and a very interesting approach that can help you if you want to take a more professional approach to the subject. And now I'm going to switch to my screen so I can show you this live in a better way. All right, let's get started. I've carefully prepared a grand total of 3 distinct case studies with 3 different bookmakers, and those are the ones I want to talk about today. The first match we're going to take a closer look at is the game between Real Sociedad and Atlético Madrid. Specifically, the betting situation. Who will get more yellow cards? There are 3 possible outcomes in total. Either the home team gets the most yellow cards, or both teams get the same number of yellow cards. Alternatively, it could be the away team that accumulates the most yellow cards. However, we are only going to specifically examine the particular segment where the home team is awarded the majority of the yellow cards in the entire match. And now you're going to see a very interesting example here, where we have, for instance, Handicap Bets. This is our first bookmaker that I'm taking a closer look at, where I ask myself the question, is the offered odds that we have here actually reasonable? With odds of 2.89 for this situation, are these odds too high? Are these odds too low? Where is the fair odds actually? How could you go about deriving a fair odds here in the first place? And that's science. That's research. That's exactly the topic. Researching sports betting. Unbiased, not narratively steering it in a negative direction, just presenting it that way, but breaking it down fundamentally. And that's exactly what I've specialized in. That's what you can expect from me. And this example once again impressively shows what's actually possible here. You can clearly see in this particular image that the reputable bookmaker is currently offering us very generous odds of precisely 2.89. And up here we see a percentage displayed, 39.52%. This value is represented across the entire market. And now we already have a basic principle here that we can internalize. We need to understand the market is always right. We might also know this from the stock market. You may have already heard that the market is always right. And it's similar in the world of sports betting, because why is the market always right anyway? We first need to understand that there are now many different bookmakers in the market. On one side, there are bookmakers who sell us the odds. That means there are odds providers who supply the bookmakers with odds. But there is also a free market where supply and demand regulate the price. And if you're interested in learning more about this, I've already made a very, very comprehensive video on the topic. It's over an hour long, and I'll link it above in this video. And today I'm going to show you another very interesting observation here. You can see here that in the rows below, I've grayed out the names of the bookmakers here. But we always have the same betting situation here. That means there are now many different bookmakers offering exactly the same bet. Now, for example, in the second row, we have a bookmaker who offers us, for exactly the same situation, odds of 2.37. Or it continues here, downwards. Bet at home, for example, offers odds of 2.25. And now I can keep looking here, meaning I can keep scrolling downwards. And there we have a whole lot of different bookmakers who all have the same game here. With Real Sociedad against Atlético Madrid, And we can also see here that the worst bookmaker for the same betting situation only offers us odds of 2.23. And that's a world of difference between 2.23 and up here, as we can see. At 2.89, if we now take a much closer and more detailed look at this from a purely scientific perspective and begin to seriously question this entire betting situation a little bit more, and by taking a more critical look, I always ask myself, for example, what would happen if I placed bets here over a very long period of time, not just one bet, two bets, three bets, five bets, but let's take a sample size of 1,000 rounds. Because we have to understand that sports betting isn't just about a single bet, not about a single moment or a single situation. Because if I were to just look at a single bet, a single situation, then you would interpret that as either luck or bad luck. It would be the same as if I took a die today. And now I say, oh, I need the number 6. And now I roll the die. And now the number 2 comes up. Then you would say, I was just unlucky. But in reality, sports betting is about much more than that. I have to develop an understanding here that I need a large sample size. We have the same thing in mathematics. That means, for example, if I use a die as an example where each outcome has an equal probability, then I need a large number of rounds so that, for instance, it works out that the number 6 can come up, the number 1 can come up, the number 2 can come up. That means I need many different rolls and attempts. And it's the same here with sports betting, where, for example, I now consider for myself, okay, what would happen now? This situation, just as we see it here, I would now repeat 1,000 times. And I've prepared for you what happens in that case. If I do this 1,000 times now, and we assume that the market is right, that up here, the probability of occurrence is 39.52%, and all the bookmakers together have done a good job to even be able to derive this probability of occurrence. And that's already the big difference. This is not my own assessment of how something will turn out, but rather I derive it from the entire market. And now let's take a closer look at this here. Up here, you can first see that I found it this way as well. That means we do get yellow cards in the game. There was SIGTIP one with odds of 2.89. They offered us the draw. 3.75 and SIGTIP 2 was 1.95. But for us, only the 2.89 is interesting now. Down here in this area, we see a value bet calculator. This is a calculator that we developed at the Sports Betting Academy. If you want to have it, you'll find a link below in the video description where you can secure the Master Access Basic. All calculators and many swing videos are included there as well. And now let's take a look at what I did here. I assumed here that I have 1,000 euros available, and I set it to a flat stake, meaning always the same stake, with 3%. That means when we approach the topic of value betting, we have to be careful not to play with stakes that are too high. And 3% is really the absolute upper limit, I would say, when we're doing value betting, because we'll have winning streaks, but we'll also have losing streaks. So we need to make sure that we stay in the game and don't go broke. And now we can also see that I have entered here how the offered odds from the bookmaker, that was 2.89. And now I enter below here. How does the entire market interpret this? The entire market interprets that this will happen with a probability of 39.52%. From this, a so-called fair odds value can be derived. The fair odds here are 2.53. If there are betting situations where the odds are above this value for exactly this situation, then we interpret that as a value bet in relation to the entire market. Not based on my opinion, but on the markets. And if the odds are below 2.53, which we also saw graphically earlier with all the other bookmakers, then these odds are too low. That means we would then be betting on what is called a negative expected value. And if we continue to examine this scientifically, we can then, based on these two values of 2.89 and 39.52%, derive what is called an overvaluation. In this example, the overvaluation is over 14%. But what does that actually mean if I'm not yet familiar with this? That means if I want to analyze this more scientifically, now let's assume that I encountered this situation 1,000 times. And 1,000 times with a significant 39.52% probability of occurrence. That would clearly mean if I were to run 1,000 complete rounds, I would realistically expect to win about 395 times and quite logically lose approximately 605 times. If I take this 39.5% probability of occurrence over 1,000 rounds, if I were there now, if I bet 30 euros and have odds of 2.89, well, then the payout, if I'm correct, would be 86 euros and 70 cents. And our so-called net profit would then be here, 56 euros and 70 cents. The net profit is always the payout minus the stake. That means we win when we win, 56 euros and 70 cents on top. But if we're wrong, we lose 30 euros each round. And if we look at this over 1,000 rounds now, so please not just 1 or 2 rounds, and use that somehow as a reference, that's far too little. We need a large sample size, and that's the minimum requirement. 1,000 such rounds so that we can give variance the time to even itself out. We will win bets, lose bets, win, lose. It's always this kind of back and forth. Yes, and that would mean if I now do this 1,000 times and the market is right, and the probability of occurrence is 39.52%, then in total I would win 22,396 euros and 50 cents, because in the end that's 56 euros 70 times 395 rounds. That's what we would win, and I would lose 18,150 euros. Those are the 605 rounds that I lose, each at 30 euros. That would be 18,000 euros. If I now add up these two components, we have what's called a P&L, profit and loss. That means after 1,000 rounds, we would walk away with a profit of 4,246 euros and 50 cents. And our so-called total investment in this scenario would be 30,000 euros. That is 1,000 times 30. That's 30,000 euros. If we now put these 4,246 euros and 50 cents in relation to that, to the 30,000 euros, then that would be what's called a yield of 14.15%. And our profit per round, our so-called expected value that we can expect here, is then 4 euros and 25 cents per round. Per round, if we invest 30 euros in total. And this is how we can now present this example in a very scientific way. So this way you might be able to understand better yourself what, for example, I personally place great value on. For instance, I focus exactly on this assumption, on this representation. And of course, I also check with a large sample whether the market is actually right here. That's what's interesting in the end. That means if we take this situation now and have a 14% advantage here, of course, that can still fluctuate. But because this odd was exorbitantly higher than all the others offered on the market, it's a very interesting indicator where you should consider this betting situation or betting decision even more, rather than just going ahead and saying, I think I know that something will happen, and accept it. For example, a much worse odd than the highest one, just like here in the market. And that's what I wanted to show you here with the first case study. Now I've prepared a second case study for you, and this one is even more extreme. This time it's about a tennis match. And that's what we're going to look at next.
Are you still relying on your gut feeling when betting? Then the bookmaker is already getting ready to cash in. Time for strategies instead of luck. We provide you with well-founded information about the truth and show you how to become one of the 1% who make legitimate profits. Whether it's with matched betting, sure bets, or value bets. sportsbettingacademy.com.
In our second example, it's about this tennis match. Paolini, Jasmine versus... Dear Linda, this is about the betting situation. Asian handicap. Specifically, 2 minus 1.5 is a type of betting market. This refers to the sets. And here we see now we have Interwetten here offering us this option. For example, they offer this for this betting situation. The odds are 4.25. And we can also see up here that based on the market, if I take all of them into account, you saw there are now really, really many. The probability is 26.92%. And take a look at this. Here again, we have a different bookmaker in each row. For example, suddenly for the exact same betting situation, we only get the odds of 3.55 here at all these bookmakers. And down here, for example, we have Betano. For the exact same situation, they only offer odds of 3.50. Now we can keep scrolling down here. Let me show you this. So now let's scroll further down. That means there are fewer and fewer. 3.40. Each row is a different bookmaker. Then here, for example, we have Neopet. Neopet only offers odds of 3.35 for the same situation. Now, if we keep going here, we already have just 3.3. And if we scroll down even further, we have here 3.25. If we scroll down even further, at some point, we have, for example, Betway included with 3.20. Now, if we go further down, there's 3.15. Yes, it keeps going down from there. This shows how many different betting providers actually offer this. There are a lot, again, 3.15. Then it goes even further, and here it already drops to odds of 3. Then here we have 2.95, 2.90, and the lowest odds I've found here for identification are at 2.25. These are just astronomical differences. At 2.25, if you go all the way up here again, the lowest odds and the highest are here. 4.25 for exactly the same betting situation. Now, this again raises the scientific question, if I now use the odds of 4.25 as a reference. In relation to 26.92, I want to learn from the market again. So, where actually is the fair value? That's the first piece of information I'd like to have. And the second is, if I now were to invest money in this, what would it actually bring me? And if I now look at this from a long-term perspective, that is over many, many bets. And let's take a closer look at this and break it down again from a mathematical perspective. Up here, you can see the tennis match again. I also checked whether it actually took place. We can also see that it did indeed happen like this. Here is the odds of 4.25 that was offered to us. And if we look at this down here again, we see the following. If I take 1,000 euros again, or 1,000 rounds, then we need to understand again, if I have odds, a probability of 26.92, then a fair betting odd can be derived from that. The fair betting odd here is 3.71. That means anything below that would have a negative expected financial value. We already saw that earlier. 3.55 was the second highest odds. So that one would no longer have a mathematical advantage if you take the market into account. But the odds of 4.25 are now exorbitantly above this value. And that would in turn mean that if I now enter this again into the value bet calculator, we can see here that the odds of 3.71 are the fair odds. If I enter odds of 4.25, I again have an overvaluation of more than 14% if I were to place money on it. If we now look at this again over 1,000 rounds, what could I expect from that? That means 269 times. I will walk away as the winner here if this probability of occurrence matches reality. And 731 times I would end up as the loser in this situation. So it's very clear here, we will lose many, many bets. About 73% of our bets will be losses, and only just under 27% of our bets will be wins. If we look at this again with 30 euros, and I have the odds, 4.25. So if I win once now, the payout will be 127 euros and 50 cents. If I subtract the 30 euros from the 127 euros and 50 cents from our stake, then we have a financial gain of 97 euros and 50 cents. If we lose 30 euros each time. If we now look at this over 1,000 rounds, not just one or two, but via a large sample, then if this probability corresponds to reality, we can expect that we will receive 26,227 euros and 50 cents. They will gain, but at the same time, after 1,000 rounds, they will also lose 731 times 30 euros. That's a negative result, 21,930 euros. And our profit and loss, that is our expected value from a financial perspective, is then 4,297 euros and 50 cents. If we consider that as a total investment of 30,000 euros, can we expect a yield of 14.32%? This is again the ratio of these 4,297 to the 30,000 euros. Or in other words, if I take this sum, these 4,297 euros and 50 cents, and divide it by 1,000 rounds, then I have what's called an expected value per round of 4 euros and 30 cents. That means if I bet 30 euros, I can expect with each round, yes, to gain 4 euros and 30 cents financially as a profit. And of course, this is also a very interesting example, quite remarkable, especially when we draw this extreme comparison here. Of course, if the general public just goes ahead and simply accepts every odds offered to them, we saw it earlier with tennis, how extreme the differences can be. From 2.25 in the lowest example up to 4.25 here, and only the 4.25 odds, that one alone, that had a mathematical advantage. All the others, if the market is right, were all undervalued. That means with the others, if I look at this in the long term, I would lose more money than I would win. If we look at this scientifically here,
You still rely on your gut feeling when betting. That's when the bookmaker is already getting ready to cash in. Time for strategies instead of luck. We provide well-founded information about the truth and show you how to become one of the 1% who makes serious profits. Whether it's with matched betting, sure bets, or value bets. sportsbettingacademy.com.
So the very last example for today that I have carefully prepared and will present. This is about the match Marsa FC versus Naxxar Lions. That's the Malta FA trophy. So I don't know any of the teams. I don't know any players. I don't know the lineups. I don't know where they stand in the table or how they've played recently. If you approach the topic of sports betting a bit more seriously, that doesn't matter. That only plays a minor role. But what's interesting here again is that now it's about who scores the first goal. And now it's about the situation where the home team scores the first goal. And now you ask yourself again, how likely is it that the home team will score the first goal? And based on information available on the market, and if we again assume that the market is right, that is, all the different bookmakers, the free market especially, this results in a probability of occurrence of 20.11% if we consider the entire market. What's interesting here is the bookmaker Bivin. Bivin, for example, offers us that they will score the first goal, meaning the home team at odds of 5.75. There are two more, but they belong to the same group. They have different names, but of course they also offer the same odds, 5.75. And now we can already see here, now we're making this comparison again. Now we're comparing, okay, what does, for example, B365 offer? For example, B365 only offers odds of 4.33, just here alone. This jump from Buin to Bet365 is huge, this difference between these odds. Now we can keep looking here. There are again many different betting providers. For example, we see here, if we scroll further down, Betatom only offers odds of 4.10. If we keep looking here, it's still the same game. That means these bookmakers that are grayed out here, we don't necessarily need to know what they're called. It's simply about me pursuing this scientific comparison. And we can see here again that the odds keep getting lower. That means here we have 3.75. And if we scroll down even further and compare even more bookmakers, the bookmaker with the lowest odds for an identical recession is only offering us the odds of 3.28. And those are simply astronomical differences, going from 5.75 all the way down to 3.28. And now, at this very moment, I am asking myself once again, if the financial market is indeed entirely correct, and the probability is precisely at 20.11%, then where exactly is the truly fair and equitable odds in this particular situation? And is the 5.75 odds too high? Where should it be? Is it too low? Could I now calculate what kind of overvaluation I have, for example? And that's what we're going to look at next. In the next situation, so I have the game open here now. You can see here that this actually existed. First goal, Marsa, the odds of 5.75 were offered to us by Buin. And if we now represent this scientifically down here again and enter it into the value bet calculator, then we'll see the following picture again. I enter 1,000 euros here, then the probability. That I use 3% of my stake, then down here the odds and the probability, so odds of 5.75, and here the probability of occurrence of 20.11, as interpreted by the market. And here we see that the fair value, if I have a 20.11% probability, is at 4.97. And so 5.75 is again above this value. And now we interpret this again as a so-called overvaluation of 15.63%. If we represent this again as a simulation and now take a large sample size and look at it in steps of 1,000, then we will see the following picture. That means if the market is right and the probability is at 20.11%, then we can expect to be winners in 201 out of these 1,000 rounds. To walk away as winners, and in 799 rounds, we will walk away as losers. If we apply this again to our stake, that means if I now bet 30 euros at odds of 5.75, I would have a payout of 172 euros and 50 cents each time. If I subtract the stake from the 172 euros and 50 cents, we end up again with 142 euros and 50 cents. That is then our so-called gain net. And our loss here would be 30 euros per round. Mathematically speaking, after 1,000 rounds, if we win 201 times, we will gain 142 euros and 50 cents each time. That would be 28,642 euros and 50 cents. 799 times we would lose 30 euros, which would be a loss of 23,970 euros. Our total profit here would then be 4,672 euros and 50 cents. And that in turn corresponds to the total investment of 30,000 euros.